Hi folks, welcome back to Things You Should Know Accounting Edition. Today we're going to dig deeper into how to record changes that are brought upon by business transactions. Earlier I showed you how to record transactions using the equation of assets equals liabilities plus owner's equity. However, in the real world, businesses don't actually use the equation itself to balance the books and recording transactions. Instead, businesses use separate records. They call these accounts T accounts. They use T accounts for different things such as assets, liabilities, owner's equity sources. So that would mean you'd have multiple types of assets, say cash, accounts receivable, stock, etc. Liabilities, it'd be the same thing, accounts payable, payroll, could be a ton of the different things. And then owner's equity. And owner's equity would be investments, and it would also represent past revenue and expense transactions. By breaking it up into smaller accounts, it allows business owners, managers, and stakeholders to better monitor their business. Now, a T account consists of a horizontal and vertical line. The name of the account is on the top of the line, and the increases for assets will be on the left side, and the decreases on the right side. And for the liabilities and equities, you flip the signs, you'll record the decreases on the left and the increases on the right. Now, to give you a little better look into this, let's check out an actual T account. Now, we'll introduce you to our first recording of a transaction we've done using a T account instead of the formula. We'll record the first transaction we did at all, and that would be Joe's investment into his coffee shop. We'll look at our assets accounts, and since Joe will be investing $100,000 in the business, that'll be $100,000 in cash. So we will take the cash T account, and I put asset on the side. Normally you won't have the asset or owner's equity there. It'll just say cash or accounts receivable. Since it's an increase in cash, we put it on the left side. Look at the master up there. Increase is going to left. Another thing to note, in normal T accounts, there's no plus or minus. I have that here so you guys can reference it at a visual site. You don't have to kind of try to remember it. You just see it. Now, just like our original equation for Jello investing, we'll have to set up the offsetting account, which in this case is Jello's capital, his owner's equity. So he put $100,000 cash into the business. That gives him $100,000 worth of owner's equity. In this case, you'd put $100,000 on the right because for liabilities and owner's equity, increases are always on the right. Now, there's a shortcut to all this. When you use T accounts, there'll always be at least two accounts offsetting each other. There a lot of times are more though. So this is the most basic type of T account equation you'll get. We'll go into more depth in the future. Also remember that both sides need the equal. So for all the T accounts in one transaction, the left side of all the accounts must equal the total of the right side of all accounts. In this case, you'll have $100,000 on the left side in cash, $100,000 on the right side in equity. They balance. Now, as a side note, doesn't mean it's an accurate transaction, it just means it balanced. In the future videos, I'll show you how to make sure you've selected the right T accounts. When you do a business transaction, there's a three-part section to determine how to do the T account. First, you have to analyze the financial event. You identify what accounts are involved. The second is you classify the type of accounts. Is it an asset, a liability, a owner's equity? Sometimes you might have a revenue and an expense and it never hits something else. It just all depends on the situation. Third, for the analyzing the financial event, you determine how much in each T account must be increased or decreased. Like I said, a 2 T account equation is the most basic. Sometimes you could have a dozen T accounts in one transaction. The second step is to apply the left-right rules in each account. Once again, left side of all the T accounts must equal the right side. And finally, you just make the T account entry. It's right there. You just put the numbers in. And if you look at this, take for example, we'll look at this example. The financial event was Jello investing. What accounts were involved? The cash and the capital. We classified the accounts. The cash is of course going to be an asset. The capital is going to be an equity. We must increase the cash by $100,000 because Jello is investing $100,000, and we must reflect that by giving Jello $100,000 in owner's equity. We then apply the left-right rules. Left equals right, 100,000 equals 100,000. It's balanced, and then finally, we'd actually enter this into the system. Well, folks, this is our first T account video. Don't worry though if you missed something. We'll be having a lot more of these videos in the future. I definitely want any feedback. If I'm missing something or if I'm not being clear or if you have a new idea, please let me know in the comments section below. Until then, I will see you next week with more T account examples. Take care.